I'm a business owner. I'm starting my own business, or I'm starting a real estate company, like I'm starting a flipping company or a holding company. How does somebody determine like what should they be doing, or is there an entity that those people should be in? And also, like, is it almost like get started first before you set up all these entities and all these expenses, and maybe don't do anything with it? Because I also see that as well too, where people almost get paralyzed by setting up all these entities, and they got all the right entities, but they never end up doing anything with it. So what advice would you give there?
Yeah, quite a few things that initially come to mind. And I say this in every single workshop that I do, every single talk that I give. A couple of things folks need to understand. Number one, how you make your money influences how that money is taxed, and how that money is taxed will give you an indication of what type of entity structure you should have to best protect yourself against taxation. So, two different sides of real estate. For those that are on the wholesaling, fix and flipping, development, what the IRS calls a dealer, those that are on that side of real estate, that income is subject to what we call ordinary income tax, which is basically your federal tax, the 800-pound gorilla based on your tax bracket. And it's also subject to this pesky little thing we call employment tax, said differently, FICA, said differently, Social Security and Medicare tax. That's 15.3%. And so, as we're having the conversation about entity structure, that's one of the things that we're trying to help our clients mitigate against is the employment tax.
Mhm.
So, typically, and again, I always preface this by saying, nothing we talk about is specific tax advice for any one individual, but usually the having your entity structured as a subchapter S corporation gives you the best opportunity to mitigate against employment tax. There are unique things that happen when you have that type of a structure that allow you to avoid that 15.3%. So for those that are on the fix and flip side, like I said, wholesaling, dealing, or even outside of real estate, those that own a business that's a service-based business, or they sell products and things like that, they typically benefit from an S corporation. Now, on the other side, going back to real estate specifically, for those that buy and hold real estate, whether they're doing short-term rental or long-term, you buy the asset, you plan to hold on to it for the long run. That usually makes more sense to hold that asset in an LLC. And you do so simply because you don't necessarily have the fight to to try to reduce your employment tax. Real estate real estate income, rental income already has that favorable tax treatment. So it usually doesn't make sense to go towards a corporation unless there are some other unique things going on. So having it held inside of an LLC is usually the best bet, and it's done so mainly for liability protection, not necessarily tax planning. Because whether you hold it personally or inside that LLC, your tax situation isn't going to change. So those are the key things that we usually start out with. How are you making the money? That tells us how it's going to be taxed. That then tells us which entity you're going to go with. And usually they're floating between those two. Now, that's not the end all be all. There are tons of other entity structures out there, but that's kind of the basics in getting started.
So in other words, if you're buying and holding, the real estate actually already provides the tax benefits.